Hello and welcome. Thank you very much for taking the time to join me today. Today I'd like to look at Apple and the PE ratio specifically of Apple. I just want to see where the price to earnings ratio is today and also to take a quick look back at where it has been over the past number of years, just to see if there's any indication on the valuation of Apple and to see whether or not we might be looking at an entry point for Apple in our portfolio at any point soon. For a while, Apple had been quite overvalued, at least when you look at traditional metrics like the price to earnings ratio and some others as well. But as I'm sure you know, that was the case with all kinds of different stocks, including most technology companies that had just been continuously going upward and upward with almost no end in sight. You can see the past few months have been very different though. The price of Apple has come down, just like most other stocks, by around 22.5% from its most recent high. Now that doesn't necessarily mean that it's undervalued, but if we do look at a number of factors with Apple, especially concerning the fact that it is a very high quality company and has been a very high quality company for a number of years, maybe it's not necessarily overvalued if you plan to hold it for a number of years in your portfolio. So just scrolling down on this main page for Apple on the Guru Focus website. And by the way, if you'd like to take a look at Guru Focus, and if you haven't heard me say it before, I absolutely love this site for fundamental research. I do have an affiliate link in the description below, and I highly recommend that you take a look at it. So right at the top of the value rank numbers here is the price to earnings ratio, hovering just below 23. So a lot of this yellow color down here just kind of looks at the historical numbers of these valuation ratios, and it tells us that it's not necessarily cheap, I guess, in the opinion of the calculations of this website, but it also doesn't really appear to be heavily overvalued either, both historically for this company and when compared to its industry. Don't forget that when you hear terminology like the FANG stocks, Apple is being lumped into a category with other companies like Facebook and Google and other technology companies, while almost completely neglecting the fact that Apple is a very different business from something like Facebook, which relies almost entirely on advertising revenue, or even Amazon, which is e-commerce and web services. Apple, on the other hand, manufactures phones and other devices and also has many other revenue sources. But I've never liked the term FANG stocks or any other attempt to lump companies together, which seems to completely ignore the unique attributes of a certain business. So that's almost a factor when looking at possible undervalued businesses that are being lumped together with somewhat similar companies, maybe more related just by innovation than anything else. So that's just a quick thing to keep in mind when looking at the valuation of Apple, in my opinion. If we click on the PE ratio from the main page, it takes us to a more detailed PE ratio page for Apple. Here it's rounded it to 20, and it does tell us near the top of the page that the PE ratio for Apple is close to a 2-year low. And the next part does give us a little bit more of a historical range for the PE ratio for Apple by telling us that the median PE ratio for Apple is just a little bit over 15, which is the long-term historical average of the S&P 500 of around 15, with a low end of just over 9.3 and a maximum PE ratio within the past 10 years of 37.84. So right away you can tell a low end PE ratio within the past 10 years of under 10. There was a point in time where the market wasn't really happy with Apple, or at least was more skeptical than it is today. And if you've followed Apple for at least the past number of years, at least as much as I have, then you might already have an understanding of some of the narratives that were going on a few years ago with regards to Apple. So here is just one article that's an example of some of the commentary that was taking place in and around 2016. I picked this point in time because this is right around the time where I had bought Apple, and also right around the time that Warren Buffett had added or started to buy Apple for the Berkshire Hathaway portfolio. So you can see in articles like these that there were serious worries at the time that Apple was going to continue declining in sales, sales lose market share to companies like Huawei. And this article here comparing Apple to BlackBerry wasn't alone when you could tune into shows on CNBC and other financial news networks continuously talking about Apple being in trouble and potentially being squeezed, especially in the Chinese market. Of course, we know that since then, Apple has continued to be a very profitable company, has grown revenue, grown its profits, and continued to be a market leader in its industry. So this is what has become recognized by the market, and why, at least compared to where it was before, there is quite a bit of a premium on the price of Apple, and we can see that in the price to earnings ratio. So let me show you a historic price to earnings ratio for Apple, just to get a little bit better of an idea where the skepticism was and to see whether or not it exists today. So scrolling down to the chart of the price to earnings ratio for Apple, this gives us a little bit more of an indication of the sentiment surrounding Apple. So if we simply think about what the price to earnings ratio is, simply being the stock price versus the earnings of the company, or what price you are paying to buy a share for every dollar of earnings, the PE ratio is a good indicator of sentiment, or even hope, if you will, for a company's future prospects. So I mentioned 2016 just a little bit earlier, where there was a lot of skepticism about Apple's place in the market and what kind of a future it had. And clearly you can see this is where the market was skeptical on Apple. Of course, after the news broke that Berkshire Hathaway was buying very large amounts of Apple, that was a catalyst for more trust in Apple and for people to think of it a little bit differently as an undervalued investment. So you can see how the PE ratio continued on, and you can see the effects of other events in the market, such as the beginning of the COVID-19 pandemic, the subsequent rally, and then what we see today as quite a bit more fear in the marketplace at the moment. So we can already see the PE ratio is not even as low as it was at the beginning of the COVID-19 pandemic. So there does seem to be some continued trust in Apple to continue being a healthy and profitable company for years to come. So the last thing I want to show you here is a chart that I like to look at, which shows the price of a stock at a given PE ratio. So Guru Focus gives us the ability to create this chart that allows us to compare the actual stock price of Apple going back, in this case, 15 years, and to show us a chart of what the stock price would be if we kept the price to earnings ratio consistent. So the purple graph here shows us the median price to earnings without non-recurring items of around 17, so just a little bit more than the S&P 500 historical PE of 15. So that's why you see the purple and the green charts fairly close together. And right here you can see that looking back 15 years for Apple, simply based on these numbers, Apple is above average when it comes to its PE ratio. And there can be many reasons for this, of course. I don't want to oversimplify something like this. Apple may not necessarily ever reach $104 per share again, or even $92 per share. But some investors might also look at this and think that simply looking back at the history of Apple, there are several points in time where the share price comes below its average PE ratio, or that is, the share price dips to a point where its PE ratio is below its average PE ratio. So I don't necessarily want to turn this into technical analysis, which I don't really do very much when I'm looking at a stock. But if the share price of Apple had come down to a point where it was priced below its average price to earnings ratio, it would certainly weigh a little bit more in favor in my mind of it being undervalued. So just based on a couple of those numbers and charts that we looked at, we can already tell that the market does have a sustained amount of faith in Apple remaining a highly profitable, successful company for years to come. Whether or not we go into recession or there are economic problems, the lack of faith, if I can put it that way, that was taking place in and around 2016 doesn't seem to be here anymore. And even with potential recession on the horizon, the market itself is maintaining faith in Apple to a degree that it might not be as undervalued as we would like. But at the same time, that doesn't mean that it's overvalued, and that doesn't mean that it couldn't be a good investment to buy into today, or that it won't go up in the coming years even further. So I hope you found this useful. Have a wonderful day, and bye for now.